Taking a look at today's interest rate markets, let's look at the two-year note futures as they're moving lower today. Two-year note futures trading lower, and with today's price action, we're moving down towards the low end of the range for the last couple of weeks as the prices currently are drifting towards that closing low we experienced January 22nd, so about 2.5 weeks ago, currently priced at 102.22. So pretty tight range the last couple of weeks, but nonetheless drifting back down towards the lower end of that range. And a couple of things influencing the market today, but the primary driver appears to be central bank dialogue. It started early with Bank of England, Andrew Bailey discussing policy, and that appeared to shift sentiment from a global perspective. After that, those talking points came out, the market sold off, and I think maybe it's just a shifting sentiment from a central bank activity from a global perspective. We did have ECB talking points this morning, and then a big point of emphasis today was Chairman Powell's testimony on Capitol Hill, which really didn't seem to impact the markets too much. I think the tone was set early by other central banks, and the market continued to kind of hold those levels as we moved through the afternoon. Now, looking at the yields, we do have that two-year yield up 2 basis points today to 429 basis points, which is the top end of the range for the last 2.5 weeks. And the yield curve shifting higher pretty much across the entire curve today. We're selling pressure even more pronounced on the back end of the curve. So for a second day, a bit of steepening in that curve as we're seeing yields higher from the short-dated bills all the way out to the 30-year bond. But a little more pronounced on the back end of the curve with yields up 4 to 5 basis points and that two-year yield up 2 basis points. Now, tomorrow, CPI and then PPI on Thursday, those could be big influences in the Treasury markets as, again, the market is very focused on inflation and Fed policy to combat some of the inflation challenges that the market has presented the last couple of months.